All right, hello everybody. Now, the big question is the dump over. Now we still know that we're still facing this entire capitulation down. We've liquidity wicked the support area that we said that would be the defining level, and it has definitely given rise to a lot of people saying that we may be moving to lower prices. Now, things that I want to sort of weigh in on both um, contexts of the market is that this was the low that we broke. However, we've closed above, so I would give that a point to the bullish case. We closed in the top half of this wick, so there was a massive buy demand that is filled in there. So that is another cause for the another tick for the bulls. Let's move down into the hourlies. Well, let's just quickly duck back. I'd like to also confirm that this imbalance is now confirmed now that this candle from Monday has been completed, and so now we've birthed the Tuesday candle, and now we're playing into that area, which may come up and fill this imbalance. However, not yet, maybe, but not quite. Let's see. Let's just build up some information. All right, now we're down to the hourly time frame. Now we can see that all this has been completely mitigated. We've got a wick through, wick, a candle down, a candle up. So that has well and truly mitigated this line. So we can clean this out, which will tidy up our chart. So that tidies up our, let's get rid of that too. So that tidies up our chart. So this area is now free. Now what we're looking through is this area are levels of liquidity wicks that we have broken through in this one imbalance candle, but there's no wicks that have mitigated. So there's no second candle that's come through and wicked, or there's no full wicks that have come up and tested. So that means that there's still imbalances. So as price fell through, people were long, they flipped short, and now they've come down, but we still have these stop losses and imbalance through here, which is going to be tested. This accumulation area, which I was talking about, price coming up and then ducking down, it did not occur. Price just fell straight away after these candles here. So that takes us to there. That was the break of structure, and so we came down and we've closed above. We closed back above this bullish sentiment. So now we've got that. So that means that we're actually still in a bearish direction. Now I also want to add in with a regressive channel, so that we've been dealing with since July. So if we fill in a regressive channel from up the top to where it was yesterday, Monday, 2 o'clock. So that's where we were yesterday. So the regressive channel was thinner and we'd fallen out of it. So we'd overextended beyond 2 standard deviations each direction. And so we've come right out. We liquidity wicked all the orders through there. We came down, retested, and now we've finally come back into the 2 standard deviations of this entire move of the month. Now if I just extend this out, you'll notice that it now widens and includes a little bit more of this volatility that has occurred just here. So that shows that we are still, on average, in this downtrend. So just because we've wicked down and we've come back up, it's not showing right now that we are currently moving to higher prices. So as we are in this area, while we do have an imbalance right here that does need to be tested, we are in the shorting side of the regressive channel. So we're in a downtrend, which means that the top side is for shorting, and that gives us the best case move. So if we come up to here, we can short off these areas and cash out in the blue zone. So where we can find support down here, and then we can move up. This isn't the area to be considering as we come down, buying while we can, buying in the blue, and then coming back up. What we'd rather see is an extension further out, an expansion beyond the 2 standard deviation, a liquidity wick from here, and then a move back into the sell side of this 2 standard deviation regressive channel. That gives us a better chance of upside, a higher move, which gives us better profit margins and a higher chance of profitability. So I've got this note here. I've got this one with an alert set. So I am watching this area, but I want to see how price plays around it. I'm not just going to set a buy order here. I want to see how it plays in there, because I would rather take this one where we come up, we liquidate some of these imbalances, and then we move back down into the buy side of the regressive trend channel. And I think that is a better play, because we are still in this. Let's move back out onto the daily. So if we do a regressive trend channel thus far, so if we go from the highs to now, we are in a downtrend. Now, while this one is a lot sharper, we are still, as of, let's just reset chart view. As of 4 days ago, we were still in the top half of this. Now once again, we've blown past the 2 standard deviations, and now we are coming up, which means that on a long term, we would like to get up around the $62,000 mark, but obviously find liquidation areas on a daily if we were to do that. But I think that we've got just a little bit more downside with the economic turmoil. I don't think that in this one full day has been the worst of it. Maybe it has. I mean, it's definitely a convincing wick on the Monday, but it's not to say that we're not going to bounce around here, that we're not going to find ourselves just mitigating a few things before we move either down to lower prices or up to higher. I don't think we're going to rocket back up. I think we're just going to mitigate a little bit more, and so I'm going to keep my profit targets close and look for these liquidation areas on the hourly time frame as areas of rejection for sell side liquidity. So the area that I'm looking for in this current moment is to be shorting through here. With a secondary through here. With a second area through there. A second buy-in. And then I also want to see how things play up and potentially average in up here as well, because even if price goes to there, to there, and then up higher to mitigate some of these higher levels, I'll average my price in and just take take a short profit around here because we've got this has become support, now it's become resistance. This was support, blown through, it's going to become resistance here. So where it doesn't work as support, it'll work as resistance, and so that's where I think that being in this channel, there's less likely chance of it expanding below the 2 standard deviation to the downside and then expand above to the 2 standard deviation to the upside. I think that's a massive move, you know, for Bitcoin to move from here to the top is 17.8%. It's currently moved 13%. But if we're to go back up to that top one, that's 22%. And if that's going to happen in 2 days, maybe it will. But maybe it won't. So that's what I'm keeping as my context. The other take that I'm looking at is if we do blow down, if we fall down into the blue area of the liquidity channel, then this is an area of buying zone that I'm looking at for a point of interest long. I want to see how this area plays out, because if price falls down to here, it only has a small move before it's back up into the sell side area of the trend channel, the regressive trend channel. So if this is to be a buy area, I would like to see it happen sooner rather than later, because when it's sooner, we've got a higher move to get up here, or a longer period for it to stay here before it gives us cause for concern that prices may move to the downside. So that's what I'm looking at right here. This is a short-term area of liquidity. This is a better zone of liquidity to buy. But we also want to see how we're playing around that regressive trend channel. It's not something that I keep on my charts all the time, but it's something that just helps you see how far price extends and whether you're on the right side of the channel, just to give a little bit more confidence. Now, so that was the micro, that was the regressive trend. Now let's just move up to the, let's just hide that. Okay, now let's just move up to the this entire move and see how it fits with our Fibonacci levels. So as you can see from the high, wrong one, sorry. As you can see from the high here down to the low, we are still just tapping the 50% mark of our move from September last year. So that is almost the lows of last year. Sorry, that's such a lie. They were lower. But this is the move that really impacted everything. But if we look at where the Bitcoin ETF was announced, was here. And so there was the quick sell-off and off it went. So here we just tapped our 50%. We're still on the upside of that. Now if we draw another one, and we draw it down, here we are, we've touched the 50% of the macro. We're sitting above we're above the 61.8% retracement of the move since the ETF, and we are now challenging the 50% level right now. So it is currently as resistance. So in one aspect, we are above 50, and on another aspect, we are below 50. So that gives us a little bit of a sense that we can still come back if we were to move, get rid of that one, if we were to move up to our move from September, and that's our 50, which we're currently on. If we were to come down to our 61.8% level, where there's not a lot of area of liquidity, there's only a little bit of daily liquidity at 42,000. If there's a lot of selling pressure within the stock markets, then there's nothing to say that we couldn't, on a macro, be coming down to test here and move up to high prices. So there's nothing to say that we couldn't come down to the 42. Now let's also bring back that regressive trend channel from the high to where we are now. That is the current extension, so that will extend us out beyond, unless we whittle ourselves way back out to December, January 25. So maybe we won't. Maybe we may only bounce at that 50% and keep it up in this above the 50% range. So then if I do the, just for absolute giggles, if I was to do a regressive trend from the lows, the absolute low, to where we are now, let's just take off logarithmic for the moment. Even so, we've extended out from the buy side, so we are well in the oversold territory. We're at this 50% level, so we're naturally going to have to come back somewhere to retest up on the macro. Well, actually we have. If we look in here, we've wicked out and we've come back in. So we're actually still in this macro upcycle from the lows. And here we are in this shorter term time frame, but still from the high of March coming down. So this might be the perfect area around the end of August to carry on to bounce around in this buy area of the downside regressive channel, the upside regressive channel. We're in a double buy zone, which could send us to higher prices from here with the support of the 50% level. So maybe that's what we're going to do. So that gives us a little bit more confluence. It doesn't say that the downside is over, but we also have to bear in mind what the stock market is doing. And if there's selling pressure and stress in the markets, then that's what's going to handicap our upside. But if support comes in there, then that will support us for the end of year rally that everyone hopes for. Alright, that's it for today. Thanks for tuning in, and we'll see you tomorrow. Alright, ciao.